Welcome back to Iraqi Dinar Hub. Now let's place ourselves mentally into the financial environment of 2025. Imagine stepping into the calm, understated lobby of a major banking institution. In your hands is a neatly organized folder, one that represents far more than paper currency. It holds years of waiting, research, discipline, and expectation. As you approach the counter, your pulse quickens. This moment feels symbolic, almost ceremonial. You offer your Iraqi dinar to the teller, believing this interaction marks the long-anticipated turning point. But instead of a routine process, the energy in the room subtly changes. The teller studies the notes, glances at their screen, pauses it, and delivers the outcome no holder ever wants to hear. They tell you the notes cannot be accepted. In that instant, it's easy to feel as if everything you've worked toward has abruptly collapsed. That initial emotional response is understandable, but it is essential to pause and reassess what actually occurred. A refusal at the counter is rarely a declaration of the currency's worth or lack thereof. In most cases, it reflects a procedural limitation specific to that branch. Today's banking environment divides responsibility into strict operational layers. Frontline tellers typically lack both the authority and the specialized training required to process currencies that fall into the exotic or higher risk category. Their role is to follow preset protocols without deviation, not to evaluate long-term monetary potential or asset legitimacy. Over the past several years, banks have dramatically restructured how and where foreign currencies are processed. Most neighborhood branches no longer maintain in-house foreign exchange capabilities. Instead, institutions rely on centralized departments equipped to manage international compliance, fraud mitigation, and logistical risk. When your notes are returned, it is not a personal judgment nor a rejection of the dinar itself. It is simply an indicator that you have entered the system at the wrong level. Understanding this distinction is critical, because it transforms frustration into actionable direction rather than discouragement. This transformation of the banking industry has been driven by expanded regulatory pressure, tighter anti-money laundering requirements, and more advanced security integration. Physical currency exchanges face far greater scrutiny today than they did in past decades. As a result, casually exchanging uncommon foreign currencies at a local branch is increasingly impractical. Institutions are consolidating resources and designating specific hubs for such activity. Recognizing this shift allows you to see the obstacle as structural, not symbolic, and that knowledge is the foundation of effective strategy. Technology now plays a decisive role in acceptance. In 2025, currency authentication is handled almost entirely by machines rather than human inspection. These systems evaluate microprinting accuracy, watermark clarity, ink response, metallic thread consistency, and dimensional precision. Notes that are bent, faded, stained, or improperly stored may be flagged automatically. Many holders encounter rejection not because their currency is fraudulent, but because it fails to meet rigid machine readability standards. It's an unforgiving reality, but one that underscores the importance of preservation and handling. This reality leads directly to the necessity of prior verification. Assuming your notes are legitimate is no longer sufficient. You must understand their security features and series classification. Post-2003 Iraqi dinar notes include identifiable elements such as advanced watermarks, color-shifting ink, and embedded security threads. Older pre-2003 Sotamir notes, while historically interesting, are generally no longer recognized for exchange in modern international banking systems. Knowing the distinction separates costly mistakes from informed preparation. For holders seeking maximum confidence, third-party authentication services have become a practical strategic step. Professional grading confirms authenticity and places notes into sealed protective holders. This not only safeguards condition but shifts the bank's evaluation from suspicion to processing logistics. Presenting certified notes immediately elevates your standing in the interaction. While not universally required, third-party verification demonstrates sophistication, preparation, and credibility at qualities banks respond to. It's also crucial to recognize that not all bank branches operate with equal capability. Smaller local branches often lack the infrastructure or international connectivity required for exotic currency handling. By contrast, regional headquarters and major metropolitan offices frequently employ foreign exchange officers trained in complex currency intake. A rejection at one location should be viewed as directional feedback rather than a dead end. Your objective is to identify where within the system the appropriate expertise exists. Equally important is the language you use during these interactions. Walking in and casually asking to cash foreign money often leads to immediate policy-based refusal. A more strategic approach involves requesting to speak with a foreign currency specialist or inquiring about the department that handles exotic currency authentication. This subtle shift in phrasing demonstrates awareness of bank structure and typically results in referrals instead of outright denials. Beyond traditional banks, 2025 has seen the emergence of specialized exchange facilities operating on an appointment-only basis. These centers focus exclusively on high-volume or non-standard currency transactions and are equipped with advanced verification systems. Privacy, compliance, and security are central to their design. While access requires preparation and screening, they represent a legitimate alternative pathway when retail banking proves ineffective. Documentation has become one of the most important yet overlooked components of any exchange attempt. Banks are legally required to verify the source of funds. Receipts from licensed dealers, transaction records, shipping documentation, and purchase history are not optional, they are essential. Without them, even authentic currency may be refused. In the eyes of compliance officers, paperwork validates legitimacy as much as the notes themselves. Personal identification requirements have also intensified. Larger transactions often require multiple forms of ID to satisfy CIC regulations. This is standard procedure, not suspicion. Preparing a complete identification portfolio signals transparency and cooperation. It lowers friction and distinguishes prepared clients from those who raise compliance concerns simply through disorganization. Emotionally, rejection can feel deeply discouraging, but success in this arena depends on detachment. Each refusal is information and not failure. Treating these encounters as professional data-gathering exercises rather than personal judgments allows you to refine your approach logically and efficiently. Financial institutions are also integrating blockchain verification and digital ledgers into physical currency processing. Some systems now digitally log scanned notes before clearance. While this enhances security, it introduces additional steps in time. Recognizing that delays often stem from systemic evolution and not obstruction helps maintain perspective. Diversifying banking relationships is another crucial strategy. Policies vary widely between institutions and can change without notice. Relying on a single bank creates unnecessary vulnerability. Establishing contact with multiple national banks increases flexibility and resilience when policies shift. Denomination, series, and physical condition of notes also matter. Banks heavily favor newer, high-security issues. Mixed-condition portfolios often result in partial acceptance. Organizing, sorting, and inventorying your notes demonstrates professionalism and minimizes blanket rejection risk. Understanding the role of a foreign currency officer is critical. These specialists have access to tools, rates, and authority far beyond frontline staff. Calling ahead to confirm availability can save time and frustration. Your goal should always be to reach expertise, not convenience. Persistence remains essential, but it must be strategic. Repeating failed approaches is ineffective. Adjusting institutions, timing, and methods is how progress is made. Staying informed about which banks are actively processing dinar offers a tangible advantage. Banks, ultimately, our business is focused on risk and cost management. Handling physical foreign currency involves insurance, transport, and regulatory overhead. Declines are often business calculations, not ideological positions. Recognizing this allows you to approach exchanges as negotiations instead of confrontations. Redemption centers, while real, are professional financial environments and not mythical windfalls. They operate under strict regulation and expect clients to meet compliance standards. Preparation and realism are essential. Timing matters as well. Policy changes often occur quarterly or annually. A rejection today does not guarantee rejection tomorrow. Keeping detailed records helps identify opportunity windows when conditions shift. Once again, note condition cannot be overstated. Automated systems are unforgiving. To warn or damaged notes may need alternative outlets such as collectors rather than commercial banks. Practical expectations prevent unnecessary shock at the counter. Banks declining dinar often reflects operational constraints, not rejection of its future role. As Iraq continues global financial integration, access may expand but responsibility for finding entry points remains with their holder. Community insights can help, but misinformation is common. Always verify directly with institutions, as regional policies differ. What works in one state may fail in another. Ultimately, success favors organization, patience, and professionalism. Walking in prepared with verified notes, documentation, identification, and composure signals seriousness and earns respect. If rejection occurs, step back, reassess, and adjust. You are learning the system, not losing the journey. Thank you for following Iraqi Dinar Hub. Stay prepared, stay informed, and continue approaching this process with clarity and discipline as we provide balanced, fact-based guidance every step of the way.